Hello, everyone, and welcome to Webinar Wednesdays. Thank you very much for joining us today. My name is Garrett. I'm part of the support team here at Uplifter, and today I am joined by the one and only Jackie Kwan, as well as Sandra Oyarzin. Thank you all for joining us. We're very excited for today's webinar because we're going to be taking a deep dive into all things accounting based, and we know you guys have a lot of questions about this. As always, we are going to be recording this session, so if you want to double back on things, or maybe we went a little too quick on some items, or if you aren't able to join us for the full amount or at all, if you have some team members that can't join at all, we will have that recording for you guys as well. Without further ado, may I introduce Jackie Kwan.
I feel like I have a lot to meet up to with that introduction.
You do, and you do this to me every week.
Can I tell you that I'm like so excited because today's accounting and reporting, and it's like, I know it's like not exciting for everybody, but it is like one of my favorite topics.
You're kind of a nerd, yeah. No, that's okay.
I know, but thank you everyone for joining us for Webinar Wednesdays. As mentioned, today we're going to be working on accounting and ledgers and reporting. So these are some of the more powerful features that are available within Uplifter right now. We're very, very excited to talk about what you can and cannot do within Uplifter and how to make the most of that with your accounting software and to pull out the reporting that you need for the financial aspects within Uplifter. So the first thing I'm going to do is I'm going to cover off what are the things that Uplifter can do. So before you get started with trying to connect your data that you're collecting from Uplifter into your accounting program, you want to do a little bit of planning. So I know that a lot of you have probably been using Uplifter for quite a bit and have been using some of the reports that are available. We're going to track towards showing you the ledger accounts feature and the ledger reports, which is perhaps one of the most powerful features within Uplifter. So as we go ahead and do that, if you haven't started using those features, one of the things you might want to do is start doing a little bit of planning in terms of how you want to see that data come out of Uplifter and into your accounting program. So let's first talk about some of the things that you can actually, or the things that Uplifter collects. So I hope everybody here can see my screen. I've got a little diagram here, and I always have this available to me because I always forget because I'm not an accountant and I don't remember all of these things every day, but I do know how the data should be moving back and forth. So with respect to that, what I like to see is that Uplifter actually collects different types of data, and the data that we actually collect within Uplifter are your assets and receivables, your revenues, and the liabilities that are attached to either your taxes or any credits that you actually might provide within Uplifter in the form of a gift certificate or a credit on account. So things that I like to remember from a GL perspective for those accountants that are out there, things that you might want to remember is that assets and receivables, they increase by a debit transaction and they decrease with a credit transaction. Whereas with revenues and liabilities, it is the reverse. So with revenues and liabilities, you credit by increasing, or you increase by crediting, and then you decrease by debiting. So for that's a little quick rundown in terms of accounting lingo. So within Uplifter, you can manage the within Uplifter, you can manage these types of financial numbers that come into Uplifter. But then what you also want to consider is, and as well, you can also manage your members and your customers within Uplifter. So those are the main things that you can cover within Uplifter. Now, the best way to make sure that you can make a smooth transition from the data coming out of Uplifter into your accounting system is to make sure that what you do is try and figure out what do you want Uplifter to do and what do you want your accounting program to do. So most accounting software out there, I know a lot of clubs are using QuickBooks, they might be using Sage or the old Simply Accounting. So all of those accounting programs, what you'll get out of those programs would be you'll get a full GL, which is one thing that even though we do have the ledger report within Uplifter, you won't get a full GL out of Uplifter because the things that we don't collect or don't track would be your expenses, your capital costs, and those types of elements that aren't hitting sort of online registration, as it were. The other things that you will get out of your accounting software will be your balance sheet and your ability to reconcile things like your bank accounts and your merchant accounts. So definitely keep those things within your accounting program. What we find is perhaps the most streamlined for the majority of clubs is that those clubs who decide not to bring over too much data from Uplifter into their accounting system will make it so that they're not duplicating too much information within the two and trying to keep the two in sync. One of the most challenging elements within trying to get your online e-commerce system to work within your accounting system is to make sure to pull in the information without having to duplicate too much of that information so that you're managing the same type of information between one and the other. So one of the things that we do recommend is that because Uplifter gives you the ability to do full accrual type accounting, you can manage your receivables within Uplifter. So all of your customer accounts and your receivables can be managed there. And as you can see, I'm just going to start popping into my admin section here. Under people and accounts and member accounts, you can very clearly see the status of your member accounts in terms of how they are doing financially. So if you keep this information within Uplifter, pull out summaries of data from Uplifter and then use that into your accounting programs, you'll have much better luck and much more time saved, as it were. So the less that you feel that you need to duplicate across the two softwares, the easier your life's definitely going to be. So the other thing that you're going to want to do in terms of accounting practices before you get started is make sure that you set up some internal protocols. So these internal protocols might include things like refunding policies. How far after you've collected fees from your members do you actually allow refunds to occur? And how are you going to manage that? So make sure that within Uplifter you do have a very strong and powerful permissions management system, so you can make sure that only the people that have access to being able to perform refunds can do so. So as well, what you can do within our Uplifter Gold, our Uplifter Silver, and previously our fully uplifted version, there's actually a number of features under Uplifter settings for invoice settings. So you can do things like you can actually lock your invoice details so that after a certain period of time, once you know that as the accountant or the bookkeeper, you're going to be exporting data maybe 2 days behind or a week behind or a month behind, you can make sure that people aren't actually editing the revenue elements of any of your invoices after a certain period of time. So this would make sure that the reports that you pull out of Uplifter will be fairly accurate and you've maintained sort of some of those protocols, and especially if you're using cash accounting. So, and as well, making sure that you communicate those protocols within your team, making sure that anybody who has access to edit invoices understands the implications of what they're doing, and the person who is actually exporting the data from Uplifter into your accounting system is aware when those changes are happening, so that communication is actually clear. So let's talk about the overall process. So I'm going to, I have a handy dandy diagram here. Hopefully everybody can see this. So
that's a nice diagram.
do you like my diagram? I actually worked on that quite a bit this weekend, and with the help of our lovely Genevieve here at the office. So, so we talked about this last week with invoices and sort of the details of the invoices and how to edit an invoice and what all of those elements mean. So here I've actually provided in a diagram your general invoice. You have your invoice items, which is everything at the top of your invoice when you're actually, everything that you're selling, all of the programs that your customers are registering for, all of the items that you're collecting revenue or income from. So the top, that part of that invoice, we always call anything at the top is considered a revenue. So if you actually collect taxes within your club or organization, those taxes will then be recorded as what we call liabilities. And then any of the payments you receive will then be broken up in either assets, receivables, or a reduction of your liabilities if you're actually taking payments via gift certificates. So here you can very easily see these are the different elements that you actually can collect within Uplifter, and our philosophy is, as per all of our standard accounting systems out there, revenues plus liabilities will always equal your assets plus receivables. That's why we always say your invoices have to balance. That's why when you actually go to an invoice and you withdraw somebody and you try and perform a refund, it makes sure that your revenues are reduced in line with whatever it is that you're refunding, either via gift certificate or credit card or even with a cash or check. So those things always have to be in balance, so that when you actually pull your ledger report is always in balance as well. So that is the overall anatomy of the invoice. And we're going to talk about how we're going to get all of those 4 different elements: revenues, liabilities, assets, and receivables out of Uplifter and into your accounting program. So what we're going to dive into next is basically the overall flow of your revenues and payments. So how do you receive your payments? So when a member comes and they registers and pays, they will be checking out through the online system. But very quickly, let's go to an invoice and see that you've collected your revenues here at the top. And as an administrator, you might actually be collecting the money. So here on your invoice, you might be clicking at it. You might be saying, oh, this person came in and they actually paid. So we're going to process the payment. They paid with check 123, and we're going to post that. So that's one way that you might be collecting payments on elements. Another way that you might want to be looking at that is actually from your members page. So on the members page here, what you can also do is you can actually go into their individual account. I'm going to go and pick Gabrielle Douglas. I think this might be a good one. And I don't know if many of you have actually looked at your member accounts pages, but when they log in, they see a very similar view to this. And if they actually have any overdue payments, it'll be very clear to them at that point in time that those payments are overdue, and they can very easily pay them. So here with an Uplifter, if you are, as an administrator, want to come in and actually say that you've actually collected a check from this person from 2015. Wow, this person is really far in arrears. Wow. You can actually say that, oh, they've come in, they've dropped off a check, or maybe even paid by credit card, as it were. So I can actually, I believe I have a fake credit card here. Let's give this a try and see if this works. Of course, it's going to give me grief. So here I can say I'm going to pay by credit card.
Sorry, just as an FYI, GoToMeeting, it doesn't like pop-ups. Oh, it's showing it. Okay, never mind. There it is. I thought you had it up there. It didn't like the pop-up.
No, it's funny because in my ear, I'm just going to say this very quickly as I'm typing in this, whenever I click copy, I get this little error noise, like I've done something really horribly wrong. So every time I click copy, I feel like I've done something bad, and it takes me by surprise. I'm like, oh my God, what did I do? Anyways, I just paid by credit card. So if you actually have the member in front of you and they've passed your credit card, you can actually enter that information right within Uplifter and process that credit card from here. So also within the administration panel, I don't know if everybody knows, but you can actually apply a payment. And you can actually say, oh, you know what, they only gave me a check for $50, or the lady just handed me a check for $200 as opposed to the $201. So you can actually make partial payments on these elements. And actually within the settings for any of those clubs that actually want to provide their members with a little bit of flexibility on that side, you can actually, under the invoice settings, allow your members to actually make partial payments as well. Not all clubs do want to do this. A lot of clubs want to make sure that their members pay all the time, but allowing this partial payments would allow a member to actually see these boxes and only partially pay certain payments that are upcoming. Gives them a little bit of flexibility. Other clubs, because they're expecting a certain amount of cash flow at a particular time, like to restrict that element. So that gives you another element to actually collect payments. One other way that you might be collecting payments, and I'm not sure if, what I'm trying to do is show you a few of the different ways that you can use Uplifter that not everybody might know. So let's say it was November 15th and you knew that you actually had an overall payment drop. You had a bunch of post-dated checks because everybody's paying by month and they've dropped off, a stack of September 15th, October 15th, November 15th checks. What you can do is you can come here and you can look for all of your pending payments from November 15th. Oh, I only have one. I thought I had a bunch. Oh, I must have paid them already. So let's say you had a stack of payments from November 15th. You can batch update them. And when you batch update them, you can actually mark them all as paid. Perhaps you might want to mark them as undeposited if you actually collected all of those post-dated checks in advance. You can attach a batch name to it, much like you would do a deposit record. So if you're actually putting together a deposit record, it would actually allow you to take all the checks that you've got, check them all off, type in the check number for each of those checks, enter them all in at once, define what time it is that you actually want to mark these as paid, so they're all marked at the same time. And if you put in a batch number like this, for example, when you actually save all of these payments and mark them as paid, you'll actually see in the payments report they'll all have the same batch name, so that if you need to come back and reconcile that back against a deposit slip because you deposited a stack of checks all at once, you'll see them all under the same batch name. So that's one of the ways that you might want to be able to track some of those bulk deposits of several checks altogether. So those are some of the different ways that you would collect payments in terms of Uplifter. Now let's go and take a look, now that you've actually collected all these payments, let's take a look at the overall flow of how you would actually record these payments within your accounting system. So you've collected all of these payments for cash, check, credit card, gift certificate payments. The first step that you'll want to do is, as these amounts are actually deposited either into your bank account or into your merchant account, because you've closed a batch in terms of when you've collected credit card payments, you want to reconcile these payments using the different payment reports within Uplifter to make sure that the number of payments that you've received amounts to the number of deposits, amounts to the total of the deposits that you've actually collected. The next step after that is, once you've ensured that you've actually done that, and I have put in a typo in my pictogram. This was all lovely until I saw that double C, and now I'm like a little bit depressed.
No, we can blame it on Jen. That's fine. That's okay.
I typed that. I really did type that. So step 2 is you want to record your revenues, liabilities, receivables, and assets together. So you'll use the reports within Uplifter to determine how those payments translate back into those elements. After a particular reporting period, you'll collect all that information and you'll enter that data into your accounting program. And I'll show you how that will work with some of your reports in a few minutes. And then the last step is, once you've actually the amounts have actually been deposited into your merchant accounts, and you might have an online merchant account that collects your online payments through Uplifter, or you might have an in-house PIN pad that you're using that uses a separate merchant account altogether. So those amounts on a regular basis probably settle into your bank account, and that depends on the what you've negotiated with your merchant account provider. It might be the next day, it might be a few days, there might be a few day delay or whatnot. Typically what happens is those amounts that actually get deposited into your bank account get split. So you have the full amount of what you would reconcile from your original payment, and then it'll typically get split where the merchant fees will be pulled out first, and then those will go directly to your merchant account provider, and then a separate amount will be settled into your bank account. So you'll want to record one last transaction within your bank, within your accounting system, to ensure that you've identified the amounts that actually got deposited into your bank account versus the amounts that actually get pulled out for the fees. And those reports will be available with your merchant account providers. So that's a high-level overview of the overall process. Let's take a look at some of the different reports that you'd use within Uplifter to collect that information.
Hey, Jackie.
Yeah, Garrett.
Will we be making those images and lovely documents available to the public?
After I fix that typo, absolutely.
Okay, excellent. So you'll have those for references, which is perfect.
Excellent. Yes. No. I will be. I'll be getting them to you shortly so that you can put them up on the Learning Center. So, like I said, after I fix them. So there are within Uplifter, for all of you that have been using Uplifter for quite a while, you know that if you've been on our fully uplifted plan or our Uplifter Silver or Uplifter Gold plans, you'll know that we actually have a number of different reports available within Uplifter. So some of our strongest reports are definitely our financial reports, but you can slice and dice your report report your revenue in different ways. You can actually see your revenue summarized by category level, by category, by SKUs, and all of these reports, all of these revenue reports here, they are always reported to you as at the time that you are that you actually pull the report. So a lot of other online software systems, e-commerce systems, and online registration systems tout this as an advantage of your reports are always to the minute. They're real-time reporting, which is true within Uplifter. So all of your reporting within Uplifter is real-time, which is great. So if somebody has made a change and switched somebody from one class to another class, or has withdrawn somebody and provided a refund, these revenue reports will definitely provide you with all of those details. If you want to just see at a sort of a high level, you'll probably use the summary reports that actually provide you a report by, let's say, by category level. You can preview that fairly quickly, and you can see broken down by category level. These are the different amounts of revenues that you've actually collected. Some revenue reports that are actually very, very important would be the revenue detail report. The revenue detail report actually gives you each and every individual line that you would have collected within your invoice. So I actually, if you look at the invoice and you look at that top part of the invoice, I'm just going to pull this from the last, since October 1st, and I'll click preview. One of the things as well, I think I had mentioned this in the last webinar, but for those of you that have missed it, if you need to define these reports with only specific columns in here, you can certainly select them as you need here. I'm looking for, and a great way to do this would be to amount. Yes, so amount, price, I think is another one. Product price charge. And the other thing that you can do too is you can actually rearrange these columns. So, and once you've actually pulled that report the way that you want, as I mentioned in the last webinar, you can actually save these reports using the filters that you've used, so that when you come back to these reports over and over and over again, you can get them in exactly the format that you need, even if we have removed or re-added or changed anything within Uplifter to provide you with more data that gives you more ability to do the things that you need to do. So, so this is the revenue detail report. A couple of other reports that are also very, very powerful within Uplifter. As I mentioned, you can store your receivables within your accounting system, but what's probably very useful is because all of the amounts that are suggested as owing within Uplifter are what your members are going to see. So what's a very important report here is obviously your financial age receivables. Your age receivables report, when you pull it, and this first report here is as at the time that you actually are checking Uplifter. So if people pay you within the day, if you pull that report later in the day, your age receivables will actually reflect that change. So these amounts actually look very much like any sort of receivables report that you actually pull out of your accounting system. The outstanding amounts, you'll probably note, are also defined by basically the terms that you set within Uplifter, in your Uplifter settings. So in your Uplifter settings, where is it? So under Uplifter settings, Uplifter settings, under site options, right near the bottom, you'll see this section called default terms and accounts and arrears. So if you actually change this, if you actually give your members, 10 days to pay, 15 days to pay, the outstanding amounts or the outstanding dates are based off of the terms that you've actually applied for globally within Uplifter, and you can actually update those terms on an individual basis per account. So let's say you've got one individual that is always a little bit late to pay. You can actually set their terms to 0, whereas everybody else has maybe 30 days to pay their invoices. That gives you a little bit of flexibility within Uplifter in order to manage that. And then you can also set restrictions also within those settings to disallow anybody from registering if that member is actually in arrears. So these are a couple of really powerful features within Uplifter, so that those members are locked out of blocking up really important registration spots within your programs and not paying you. So in that way, that makes sure that you always collect the money that you need. So as well with our receivables reports, if you are actually using Uplifter's ledger reports or our ledger account feature, you also have access to what's called our financial age receivables by historical report. So this is much like your accounting system, where you can actually say, I want this report as of a particular date. So let's say I want to actually know what my receivables were on October 31st, because October 31st was my year end. This gives you a great way of saying, my year ends October 31st. I've got my bank reconciliation up to date as of October 31st within my QuickBooks, but I also want to make sure that my age receivables within Uplifter reflects what my age receivables are within my accounting system. Not very many online systems actually provide you with the ability to pull reports as at a particular date, but if you use the ledger accounts feature within Uplifter, you can actually backdate this age receivables report to make sure that it matches up with your year end. So other reports that are very comprehensive, that are very useful to actually pulling out information to collect into your accounting system. And we actually have a couple of reports. I actually had a little bit of a teaser last week. Our Invoices summary report for any of those clubs that are actually using cash-based accounting as opposed to accrual-based accounting. Do I have time to talk about cash-based versus accrual-based accounting? I kind of skimmed over that.
Sure. Yeah, let's
Yeah.
hear that.
Okay. Yeah. Okay.
Let's talk about cash.
Hey, Garrett, why don't you tell us what the difference between cash-based and
Oh man, you know that I went to school for this, right? I have like full degrees in this. I have no idea. I'm gonna mute myself.
So cash-based accounting means that you're actually basing your business based off of, I'm only going to report any revenue based off of money that I have in hand. So a lot of clubs like to work with cash-based accounting, even though they actually might be practicing accrual-based accounting. Any of those clubs that are actually setting up installment payments or saying that they have receivables or money is owed to them because of programs that have been registered for, but they're expecting to collect revenues in the future, that's accrual-based accounting. Whereas you're saying, I have made $500 on this person who has registered for a program on September 1st. Even though I haven't received all that money from that person, I know that that's how much money I'm making right now. And over the next 4 months is when I will actually collect that money. So typically with accrual-based accounting, what you will do is you will record all your revenues at the time that transaction has occurred. You'll hold everything that's owed to you as a receivable, and then you'll slowly collect that. And as those monies come in, then your receivables go down and your assets go up. Versus cash-based accounting, where is different, where in that case, every dollar that you've received, even though they might not have finished the program, if you received $100 this month, I only want to record that $100 worth of revenue this month. And then the next month, you're only going to record the next $100 that you received for that program. And so at that point in time, what you want to do is you'll actually want to record your revenues as a ratio at the time that you actually receive those amounts. So if you are practicing cash-based accounting, we typically assume within Uplifter, because Uplifter is accrual-based, that you're not using installments. So if you're not using any installments and anybody who comes and registers online within Uplifter, you can actually use our Invoices summary report. And we actually just added a couple of columns just last week that will allow you to break out some of this information if you're not using our ledger accounts feature. So here, I'm just going to pull as of October 1st, and I can preview this. And here I can see the actual invoices that were completed their registration. This has some outstanding amounts. So this club that I'm using is using an accrual-based accounting, but I'll show you what this report looks like regardless. You can actually see here the breakout of the total registration revenue, the subscription revenue, or the product revenue. However, let's say you want to actually see that by category. You can actually just use that one easy filter. And from here, you can actually see these additional columns here that actually show you of all the invoices that have gone through, the breakout based off of the different categories that might have been applied in these invoices. You can also do that by category level or by SKU. So that gives you a couple of different options within pulling these reports within Uplifter. So you can see here. So this does give you the invoice totals and the different breakouts based off of the basic setup that you might have completed within Uplifter for your categories, category levels, or your SKUs. Additionally, what we've also provided is, I'm really excited about this new report that we launched just this week as well. We've created what's called our Payments Paid Receipt Summary. So for those of you that, again, are using cash-based accounting and aren't collecting a lot of installments in the future, if you want ASAT reporting for the amounts that you're actually receiving to date, you can actually say, I want to know how much, what my revenue breakdown is based off of the amounts that were received since October 1st. And I'm going to click Preview. One other thing that I'm going to dive into here in a quick moment after I show you this report here is the difference between some of our dates. So here you can see the reference number. So within Uplifter, we store what's called a payment reference number. This reference number is actually the same number that we would actually push up to your online payment provider. So they typically have a reference number or an order number. That would be the same as this number here. This gives you the invoice that it was actually collected on, the payment amounts. Because within Uplifter, we're actually allowed to actually group up payments like I did just earlier today in that demonstration that I showed you. You can see that I made a single payment of $1,060 and it was broken up against the 4 separate individual payments for those invoices. You can see the transaction ID and the approval code. So those 2 elements are also typically provided through to your online merchant account provider. So these numbers can actually be matched up to do your payment reconciliation when you actually collect your payments within your merchant account provider. And then as well, this is the batch name that I showed you earlier. If you were actually recording a batch and you actually want to use that to match up against your deposit slips, you can see that under your batch name field. If you actually go over to the right, you'll see that here, as before, we've actually broken out the revenue for each of those payments, and that will occur as at the time you pull this report. One thing that you'll note, though, is that with these elements that actually have 0, those are the refunds that might have occurred. So you can use those same filters that I showed you on this report as with the invoice summary report. You can see it broken out into registration, subscription, and products, or you can actually break it out by your categories, your category levels, or by your SKU. So each single payment, you'll actually see what those amounts are that are attributable to every single payment. So if you're not using our ledger accounts feature, this is a really quick way for you to pull that data out and import that into your, or record that those amounts into your accounting system. So from here, though, the best way to actually record this data from Uplifter into your accounting system is by using our very, very powerful ledger accounts feature. So from here, I'm going to get Garrett to show you how to set up your ledger accounts. I have a ledger account set up in this system, but I think Garrett's going to show us how to do it from scratch.
Yeah.
Garrett, are you ready? Are you ready?
Are you ready?
Did I?
You didn't do it.
There, yeah, there. Oh, I have to click the other button.
There we go. Yeah.
There we go.
Yay. Okay. So we have now transitioned over to my screen here. And on my screen, you can see the ledger accounts. Now, this is available to the fully uplifted or Uplifter Gold tiers there. This is available through Settings, Ledger Accounts, and here you can begin to craft your ledger accounts. As you can see here, and as you can see with this giant warning here, you do need to create at least one of each of these accounts here, and that's what we're going to do today during this call. First and foremost, we have our asset accounts here, and you can begin by adding a new account by just selecting this Add New Account to the right-hand side. When you do so, you're going to be offered your first account listing for that account type, and you can see you can do that for all the other ones if you want to. We're going to clean those up real quick and just focus on asset accounts presently. Now, asset accounts, these are going to focus on, as you can see when you hover over this, recording your payments that you have received and marked as paid specifically. So these accounts are going to focus on your payment types, so things like cash, check, debit, credit, etc. When you're creating an account, you'll have a few things to consider. First and foremost, you'll have this default radio button, and we're going to come back and talk about this in just a second. Next, you'll have your account code. When you're setting up this ledger, it can actually have a one-to-one relationship with your ledgers in your accounting software. So if you do have asset accounts, you can absolutely track those as well. Let's call this account number 1000, but it can be anything you'd like. And this can be also, this account name can be anything you'd like as well. We're going to call this default asset account first. And last but not least, you'll be able to link this account to certain items within your system. And we're going to double back on that in just a second. Before we do, we're going to pop back to this default button, because this default button indicates the essentially the most basic basket that things will fall into. As you create more accounts, you can get more specific with these baskets, as it were. I'm going to keep using that term. And so you can create more refined baskets and accounts to capture certain assets or receivables or revenue. But if you happen to have something that transacts on the system that you don't have a specific or a default or general account for, it's going to land in whatever account you have set up as your radio button. So we'll see this more so when we talk about the revenue accounts. But do be mindful of this. Next, let's actually add another account here. So this is going to be our default account. Anytime that you create an account within the assets, receivables, revenues, etc., you want to have one default account marked by this radio button, and this will have no tags here. This will be blank in the link to section. Next, you can add in another account, and let's call this 1001. And this is going to be our offline payments account. And here, because we want to record things like offline payment, we're going to want to tag specific things. And again, asset accounts are associated with things that we've marked as paid, payments that we've marked as paid. So we want to check for certain types of payment methods. Now, in order to do that, we want to tag something here. In order to tag things, we simply begin typing in a word. You may have a word in mind, you may not. You can essentially just type in certain letters, and sometimes you'll see certain things. But generally, with the asset accounts here, we want to look for payment methods. And so as we type in CA, for instance, we can see we have cash. Cash is an offline payment. We're going to select that from the system suggestions in order to officially tag it. And you'll know that you've officially tagged it when it has this nice little wallet icon and it's blue when we hover over it, etc. We also want check and any other offline options that we might have. Additionally, we can add another account, and this is a very wise, I don't know why I keep doing that. This is a very wise choice to have an online payment option as well. This way, you can account for things like your Bambora gift certificate, etc. So this way you have a split between these two items, and when you want to pull your ledger report, which we'll see in just a little bit here, you'll actually be able to dissect these items, these two account types, in order to get more transparency and more granularity in your reporting. So here we have multiple accounts built into the asset account variation. We've defined what these accounts do and what sort of elements they track based on what has been tagged here. And we've ensured that we have a default account marked by this radio button that has no tags at all. So these are some basic asset accounts. Receivable accounts will actually parallel your asset accounts, because these are very much like your asset accounts, except they're going to record payments that you haven't marked as paid yet. So these are pending and undeposited, and these are paid. So you can essentially mirror these, but you may wish to only have a singular receivable accounts, really however you guys want to set that up. But revenue accounts, you're probably going to have a lot of these. So let's take a look at these here. Revenue accounts, as with any account type here, you're going to want to have a default account. Revenue account. And that is going to have no tags. This is your catch-all net. Now that we can have our catch-all net in place, we can now make more specific accounts. The way that we want to do this is by first creating our default account, then our general accounts, then our specific accounts. And the thing to keep in mind is that specific trumps general. So the more specific you are with your tags, the more overruling that account becomes. So let's take a look at our category levels here. So in our system, in the system that we're playing around with, under settings and categories, we have some categories here on our left-hand side, and within each one of these we have some category levels. And of course we've made our programs based on these items. Jackie, I also have a nice diagram. Look at that. You came in halfway there, so the audio sounds super weird. That's awesome. So this is a very nice diagram that made Jackie very shocked. And here we have our categories. And as you can see, every category is then split into category levels, which you can also see in the system here. Categories split into category levels. And then next we also have these category levels being split into programs. And that's important to remember because when you're tagging things, what you tag is going to be based on what you need to track. So when it comes to revenue, you might be thinking, I want to track all of the revenue in my kids program in one account. And if that's true, you can say that account number 3001 is your kids revenue. And you can begin by typing in kids and selecting the kids category. By selecting the kids category is essentially the same thing as selecting the category levels within. So by selecting kids, we're selecting all these levels here. And by selecting that, we're also essentially selecting all of the programs within that. So anytime someone purchases a program that's affiliated with one of these category levels, it's therefore affiliated with kids, and therefore we've tracked it in this revenue account. Similarly, we can create another account here. We can call this 3002, and maybe we want to call this adult revenue, because in our system, we also have an adult category with adult category levels. But maybe when it comes to adult, we actually need to track this with a bit more granularity. So rather than tagging the category level here, we're going to get specific with the category levels inside. So maybe in one of my revenue accounts, I track adult 1 and 2. And so I'm going to tag adult 1 and 2 here from the category level suggestions. Adult level 1, adult level 2. And in so doing, I've effectively selected these category levels and thus all of the programs within those category levels. So from this diagram, I've actually sort of bifurcated these options here. So I have these category levels. So if this were level 1 and 2, for instance, then you would have programs, program, but you wouldn't have included the revenue for these other two programs because they're not attached to this category level. Next, if we wanted to capture that adult level 3, we can absolutely do that as well. So adult 3.
Sorry, I had the wood chipper going there. I don't know if anybody can hear that. Sorry. I'll turn that off.
Yeah, thank you.
No problem.
So we're going to do adult level 3. And now we have this captured. Now, you might be asking yourself, what happens if I had something like this, adult revenue, and I had my category tagged? Well, as we noted at the beginning, specific trumps broad or general. What that means is that these accounts, these options here, they're more specific than this one is, because this adult option here is only the category, whereas these are a category level, so these are more specific. So if we had a setup like this where we're tracking adult revenue, and then in another account we have these more specific options, these would actually capture the revenue for the programs in these category levels, and in this particular instance, nothing would be tracked in this adult revenue because everything else is accounted for in other accounts. So that's definitely something to consider. It's also something to consider when you're speaking about specific programs. Now, generally speaking, when you're looking to work with accounts for programs and things like that, you'll want to use categories and category levels as much as possible. The reason being is as your site expands and you create more programs and it's next season, etc., it's something of a pain to have to remember to come back and tag all of those new items. So if you can avoid it, you should avoid tagging individual programs. So you can do just these categories and category levels. That way, if you do make new things, it's already accounted for. It's already traveling into those buckets there. But if you do happen to need to tag individual programs, you can absolutely do that as well. In our particular instance, we have a new competitive account here. So we've got our competitive and we've got the 3 tiers. So maybe in this instance, I'm going to replace account 301 and do comp revenue. And this is going to be level 1. And so, as this name might suggest, I can actually capture this by tagging the category level. So I'm going to do competitive, and I'm going to select level 1, no problem. But now I want to actually create an account that captures the revenue for just one specific program. And this is going to be my level 3 Wednesdays for comp. And so what I would need to do is simply begin to type in that name again and to find the desired product. Now, when it comes to products that have similar names or similar nomenclature and stuff like that, it may be true to say that when you're typing things in, you actually see this happen right here. Category level 5 out of 9. This is just showing you the top 5 items that are close to what you're typing in. If you see this 5 out of 9, and you don't see what you want out of this list, you simply need to continue typing. And the more information you type in, the more refined these suggestions are going to be. In this particular instance, I'm looking for comp level 3 Wednesdays, which is just a particular program. So under my products list, I see that this is a program that I want, and I'm going to select that option, and now I've officially tagged that single program. Now again, we do recommend you do category levels and categories, because that way you don't have to come back here next season when you offer the same program for, this one's your fall and you offer it for winter. You don't have to come back here next season to tag your winter one as well.
This actually comes back to why we always suggest creating a default revenue account, or any default account, as it were. Not that you might necessarily have a default account within your accounting system, whether it be for revenue or for your assets or whatnot, but just in case you've added something new to your system and you didn't properly tag it within your ledger accounts here, anything that isn't properly tagged that falls into that specific and then moves up the chain through your category levels and your categories will automatically get dumped into your default revenue account. If you don't have your sort of a plain blank default revenue account, whatever is set as your default revenue account in the radio button on the left side, that's where anything that isn't tagged will get thrown in. So sometimes you might be pulling out those reports and you're thinking, if that default revenue account was selected as 30001 or 3001, and let's say you added a new category after the fact, and you started collecting revenues, all of those amounts would automatically go into 3001, and it might not be a kids program at all. So that's why we usually suggest creating that default account, so that way as you're exporting elements and you realize, why is there revenue coming here, it means that you've probably forgotten to tag something. So just keep that in mind, and then that way it allows you to sort of reattribute that revenue as required before you actually put it into your accounting system.
That's exactly right. I was going to say that. I was going to say all that. So thank you very much.
I knew you were.
Yeah,
I just like to step over you.
So yes, that's exactly true. And to sort of illustrate that point, here is a program that I have in my system, competitive level 2. As you can see, this is attributed to the category level competitive, which we don't have tagged here. We only have level 1. And it's tagged to the category level competitive level 2, which we also don't have tagged here. So what would happen is if and when someone registers for this program, the revenue for that program won't fall into any one of these buckets here, because there's nothing set to capture that. So it's going to fall into this default option, because this is what I've marked with this radio button. So be mindful of this radio button, and be mindful of having a blank default account available for each account type. So let's add that here as well. 2000. It's going to be our receivables. And that's going to leave blank. And then we're going to do liabilities. So like I noted there, receivables, this will parallel your asset accounts most likely, and have the options for cash, check, and Bambora credit card there. Now next, for our revenue accounts here, what we're looking at presently is we have a default account, we've got our general accounts, and we've got a specific account. But there's another way to do our default accounts as well. If we want to have a bit more of a global feel, and we're not really concerned about tracking all these different revenues like this for the program specifically, we can instead erase all these guys, and we can create an account that just captures our program revenue. In order to do that, we can simply begin typing in the word program, and the system's going to offer these key default filters. So here we have default for programs. Now, the nomenclature for this might be a little confusing. Although this is a default tag, this generates what's known as a general account. So this is your default account, and this would be a generalized account because it's generally collecting revenue from your programs. So we have our default for programs, as you may have seen there. Oops, my apologies, hit the wrong button there. Default for programs, as you may have seen, and especially as you're seeing right now, there are other default tags as well. So you can also capture a default for subscription revenue, product revenue, and for positive and negative custom lines. If you joined us for our last webinar, we talked about invoices and interacting with those. And one of the items that you can add to an invoice is a customized line, a sort of on the fly. You don't sell it regularly. You just built it for this one particular invoice. You can add that to be captured here as well. So you can set positive or negative values to be captured in different accounts, the same account, whatever you'd like to do. So you can have these default items here and then get more specific in other ones. So let's say this is going to be default for programs, but maybe in 3002, we do want to track our kids' revenue in a different account. So maybe we're just concerned about, how are our kids' programs doing? We want to know how people are growing throughout that curriculum. So we're going to track that revenue in a different account. But the rest of our programs just follow this general one. And again, specific trumps broad. So this is a broad general option here, and this is more specific than this default tag. So that'll filter into this, and then anything that's not kids filters into this, and anything that's not programs will filter into this. Okay, so that is a way to set up these options here. The last but not least, of course, we have our liabilities accounts. Now, liabilities, as you hover over this little question mark here, these are values that you owe other parties. So generally, they're going to be gift certificates, taxes if you have those enabled, and you can account for those within the system as well. So like anything, you're going to want a default liability account. You maybe want to take a typing class every once in a while, because if you type like me, it's going to be hard day. 4001 might be for our gift certificates. And here, just like anything else, we can begin by typing the word gift certificates and see what pops up. You can, of course, go through the alphabet if you really wanted to, but generally speaking, you'll type in gift certificates, and now we can do default for gift certificates. There is also another default liability account, which is default for gift certificate payments and refunds. So this option here is going to track when you create a gift certificate through accounts gift certificates. So that's a manual creation, created it from scratch. There's not really a reason within the system as to why that gift certificate was created. It's maybe just a credit or something that they've earned. However, you can also add another gift certificate account and use the alternative here, default for gift certificate payments and refunds, which is tracking when gift certificates are created or used on invoices specifically. So when a gift certificate that you created in any capacity is used as a payment, it'll fall into this account. Or when a gift certificate is created through the refunding process, again, it will fall into this account. So those are the basics there. If you do have taxes enabled, which I don't on this site, I should have done it, my apologies, you can also write in your taxes. Maybe you have HST, that would pop up very similar to these default suggestions here. You'd see your tax options. You'd be able to select that as well to track those liabilities. Now when you are, oh, yep, go ahead.
Sorry, no, finish off and then I'll jump in.
Okay, so when you are happy and you've got everything set up as you would like, you can of course save. Now you can hit the save button as often as you want. By all means, click save as many times as you want. It's like a word program. Click save, come back to this, make some adjustments, click save, do what you need to do. Take your time in order to set this up properly and correctly. And of course, you're more than welcome to reach out to us and ask, hey, am I missing anything? Do you suggest anything? We're happy to help you get this set up. When you are ready for it, though, you'll also want to check off Activate Ledger and click Save. By doing that, you'll effectively, as this name would suggest, activate your ledger. This is going to do a couple of things. First and foremost, it's going to enable your ledger as of the time that you hit the save button, which means that as of that time, any further changes you make to this will only be on a go-forward basis, as the ledger account it's going to create is immutable, which means, making changes here, you can still do that, but it's only going to affect it as of the date of the change that you made. The other item that it's going to do is backfill any information that you have in the system already. So if you're activating this before you've gone live, then no issues there. There's no information to backfill. But like many clubs, if you're activating this after maybe even 1 or 2 years of using Uplifter, now you're going to need to backfill all that data. Now, before the ledger account was activated, there are pieces of information that were essentially lost in the fray of adjusting payments and doing things like that. So because the ledger account wasn't activated at the time of those backfilled items, there are certain credits and debit lines that actually won't exist in the system. So what's important to note, if you are activating your ledger mid-season, mid-year, whatever it happens to be, the ledger account will balance if you pull your ledger account from the beginning of time to the beginning of when you actually activated your ledger. That will balance on aggregate. So any time that you pull in, that will balance on aggregate. Thereafter, however, it will balance on per invoice, per time, whatever you need to do. It'll all balance out nicely. Yeah, I may have said that wrong, Jackie. Do you have any insights?
Can I jump in? Can I jump in? So when you activate your ledger, think of it very similarly to when you actually set up a bank account within your accounting system to begin reconciling that bank account. So what it basically does is that activation date is like the date that you've decided, this is when I'm going to start reconciling my bank account. So the system assumes that everything prior to that activation date has been balanced or reconciled in some way, shape, or form within your accounting system, and this is sort of the start point. So, and the reason why this date is very important is because up until now, Uplifter has been sorting out all of your revenue and all of your assets and all of your receivables as at the time that it occurs. So if you had deleted a payment, we don't necessarily track that payment got deleted and how that payment might have been reapplied to a refund or whatnot. We just know that happened. When you activate your ledger, once that's been activated, Uplifter actually creates a ledger very similar to any accounting system, very similar to the enterprise level accounting systems, much like Sage, ACPAC, those types of accounting systems where any change back and forth will be recorded within the ledger. Before that, we just know what has happened. So when we backfill the data, we backfill it as best as we can based off of the dates that are there, but there might be little elements where a payment was removed or a program was deleted from an invoice where we might not have the full picture of how to actually record that in the ledger. Additionally, Garrett, can you just scroll down just a little bit? One thing of note, the reason why we actually have the default accounts for gift certificates versus the default accounts for gift certificates and payments and refunds is that when you generate a gift certificate within the gift certificate manager, one of the issues that Uplifter has is we don't know how to attribute the balancing entry for that gift certificate that you've generated. You might have received money for that gift certificate, in which case it needs to be offset by an asset. You might be providing that as a gift to somebody or as a discount, or as because somebody has volunteered and you're providing them with gift certificates because of their volunteer hours. So it might be set up as goodwill. Because we don't know how to set up that balancing entry, your ledger will always balance except for the difference of those gift certificates that are generated within the gift certificate manager. That's why we typically suggest to you to create a separate ledger account for that gift certificate. You might track it as a single account within your accounting system, but we suggest separating it here within a separate line within Uplifter. So you might call that 4001A and then the next one 4001B, knowing that when it comes time to actually enter that data into your accounting system, you're going to track it under one liability regardless, because all of that information is going in and out. But you'll know that anything recorded under 4001A, you're going to have to find a way to determine how should I actually set that offset in my ledger, in my journal entry when I actually set up the ledger. So those are a couple of things to keep in mind. Garrett, did you actually have more that you wanted to show? Because we're at almost 2 o'clock and I haven't even shown the report yet, and I'm very excited about this. So
no, by all means, take it away, and yeah, look, it's all you. I will hand over the torch here. 1 second. There we are.
Oh, there we are. And like, My screens, I have too many screens. I don't know which one I'm sharing. Okay, so here I'm back to my demo gymnastics club, and I actually have my ledger account set up within my demo gymnastics club. Just refreshing to make sure I didn't log out. So you can see the setup that very similarly to how Garrett had set it up, but this is for this site, and you can see my different defaults here. And you can see that I activated my ledger on March 5th. So everything, if you actually pull a ledger report up until March 5th of this year, it will balance to the penny, except for this default, the amounts that were generated from the gift certificate manager. So everything after that, if you take any time period will balance within your ledger report. So what I've also done here is, I'm just going to pull this page up as well. So here I've got a sample QuickBooks Online account set up. So you can see here that I've actually, and one of the great things about Uplifter and the ledger account system is that we don't care what type of accounting system you use. If you want to use paper and pen and Excel, or if you've got your accountant who just sort of takes all of your data, you can just send them a ledger report and they should be able to figure out what's happened. If you actually have QuickBooks or Simply Accounting or Sage, whether it be online or the desktop version, you can use the ledger report in concert with any of those systems. We don't require you to have one particular accounting system to make this work. So here you can see I've set up my ledger accounts here. Here's an example of Sage. Under Sage, I think it's under Chart of Accounts. Hopefully this hasn't logged out. Yep, so here I've set up the same ledger accounts here within Sage. So it doesn't matter which system you use. You can use Uplifter to pull the reports to record this information. So I'm going to head into my ledger report here. Okay, so under reports and ledger reports, and so as I mentioned previously, the financial age receivables historical report will pull this based off of the ledger. So this gives you the ability to actually create an age receivables report based off of a particular date, which is very powerful for most people who need to sort of reconcile to a year end or a period end to make sure that that information coincides with anything within your accounting system. So within Uplifter, you'll go to the ledger report once that's been activated. And the ledger report here, like I said, any date ranges that you actually pull up will actually provide you with an exact balance of what has happened financially within the system. So here, I'm just going to preview from October. Oh, actually, I want October 31st because I've already done my other months here. So, so here you can see this ledger report, very similar to the detailed ledger reports that you'd probably pull. This is more similar to probably like a Sage, but the condensed version of this can actually is very similar to what you would see in QuickBooks as well. So you can see exactly which ledger account you set up, the amount, a description, any details that might be attached to that actual transaction, the invoice number that it would be attached to, and either the debit or credit that would be associated with that. As well, you can see what we store as a ledger transaction number. So any element that actually comes in and out from a financial perspective within Uplifter is recorded here. So if you are dealing with large swaths of data at a time, we do suggest using the CSV option. So when you actually download a CSV within your Excel program, so this gives you the full detail. If you're handy with Excel, what you can do is you can actually go to your data, click subtotal. You'll want to add your subtotals for both your debit and your credit columns. Make sure that you are changing on account code. And this will actually break it out so that it comes out to a very quick and summarized report of about 10 lines. And these are the values that you would actually enter into your accounting system based off of these account codes. So you would just enter 102 is a debit of 896.94. Now, if you're actually working with smaller sets of data, whether it be on a daily or weekly basis, or if you don't have a lot of transactions within your club, we've actually added just very recently, if you actually click this report and use the Excel button, we've actually done all of that work for you. So if you use the Excel sheet, ta-da! When I was actually preparing for the webinar, I was going to say, well, I'm going to show you how to actually use Excel, and then I realized, why don't I just do this for you? So I added all the subtotal details within Uplifter. It is a bit resource
You're
intensive, so
so
that's why I'm
nice.
yeah, well, yeah, I tried. So it is a bit resource intensive. So if you're actually trying to pull out, months and months of data, it might take a little bit longer. CSV is always faster, but in this case, it automatically pulls out the Excel report with everything summarized. You can click the little 2, and it breaks everything out to you. And not only that, what we've also added is 2 additional columns that give you the net debit and the net credit amounts. So this is how much that I would actually record in my accounting system. So I'm going to pull up my accounting system here. Hold on, let me just reduce my windows here so that it's a little bit easier to see. And all you would do is here, this one is Sage, and you go to More, Journals. Actually, I'm going to use QuickBooks because I think the majority of our clubs actually use QuickBooks. So, and I know that you might be using QuickBooks Desktop, but it should be very similar. You should have something called Add a Journal Entry. So within QuickBooks, you click Add a Journal Entry. And then you just have this basic journal entry that you would just enter this information in. So 102 means this is my checking account, and I know that I have a debit of 896.94. So one thing to keep in mind, I noticed this as I was actually playing with QuickBooks Online, is that with QuickBooks Online, it doesn't actually allow you to create a general receivables account that you enter in information through the general journal entry. You'll have to create a separate asset account. I know Sage seems to allow you to do that, so it doesn't seem to be a problem. But you'll have to create a separate Uplifter receivables account, probably within Sage, where your receivables won't necessarily be tracked in the same way if you actually are setting up invoices within your QuickBooks system. So it's pretty simple. So you're just going line by line, entering in this data. So, and you're just taking the net. So you can see here for my credit card receivables, I actually don't have anything here, but you can actually pull this out and see the details. So you can see, oh, this came out and then this came in, but the net recording is 0, so I don't have to enter anything there. So instead, I'm going to move to 301, and 301 is 1468. You know what? I'm not going to actually go all the way through this because this will take me a few minutes to do. One of the things I also noticed with a number of the elements within some of the online systems is within the online systems, you actually have the ability to actually add attachments to a journal entry. So once you've actually added all of this information in, you can actually take the report that you pulled out of Uplifter, upload it to the specific journal entry, so that if you actually have to go back and figure out, well, what happened at that time, you can pull down the report that was used to actually enter in this information. So I found that to actually be a really handy feature within the accounting systems. So what's great about the ledger report within Uplifter is that it's not going to change. So if somebody comes back and actually makes a change or makes an edit, if you pull it will record to the ledger as at the time that those changes occur. So you can have full confidence that this data that you're entering in from this ledger report will not change if you come back later on. So let's take a look very quickly at, I'm going to show you, and I know that we are running late, but I know that ledger reports and accounting is a hot button topic. So I'm hoping that everybody, if you can't stay with us, not to worry, we'll have this available online for you to watch a little bit later. So I apologize if this is taking a little bit longer than I expected, but this is great information, and I just want to make sure everybody has it. So I'm just pulling up one invoice here, and with the ledger report, you can actually see the ledger reports on a particular invoice, and each individual invoice will always balance. So I'm going to pull this report out and put this side by side so that you can actually see the data here. So what's great about this is that this invoice in the background that you can see here was created on September 30th. And at the time on September 30th, the person actually registered for this one program for $362. And then they also had the $20 membership fee and the $40 membership fee as well. And those were added to the ledger. At the time, they said that they were going to pay by cash. So we recorded a receivable of $422 in cash. But you'll see here about 3 minutes after the invoice was actually completed, you'll see here that says 3:30, but the invoice was completed at 3:27. So about 3 minutes later, they walked in and they said, oh, you know what, I've actually got the cash, ran down to the gym immediately and said, here's my $422. So here you'll see that that $422 is now removed from my receivables and then added as paid that accounts into my bank account. So you see that in and out. And not all online registration systems will actually show you that in and out. Once you start using the ledger, we show you exactly every debit and credit for any dollar that is moved within, every cent that is moved within Uplifter. So that all happened on the 30th. But 3 days later, she comes back and she says, you know what, I don't like that program. That day doesn't work with my schedule and my daughter needs to move. So you can see here actually that they, I'm just going to move this over. You can see here that they withdrew on the 3rd from the Kids Tumbling 101, and they decided that they wanted to move over to Kids Cricket on Mondays. So here you'll see that the $362 is then debited from your revenues, and in this case it was done as an adjustment. And then what you can see here is the $300 from that other program is then credited to the revenues here. And also what you also see is the gift certificate refund that was actually applied to this account due to this refund. So if you pull this out and you take a look, you'll see that all of your debits match your credits, everything balances perfectly. If you would have pulled this report on September 30th, you would have gotten this great picture from these lines here. And then if you would have pulled a report 3 days later, because you're now recording the next batch, you'll then see these balancing entries that show the adjustment of the removal of the revenues from the one account, the addition of the $300 into the new revenue account, and then the refund of the gift certificate. And those balances will be what you actually record in your accounting system. If you're actually using our Invoices detailed report, this is actually the same invoice here. What I usually suggest is when you pull the report, if you actually want to see this sort of detail and you're not using the ledger accounts feature, you can actually see a lot of these details if you actually also select the line adjustment. Make sure to view line adjustments when you're actually pulling that report. So here you'll actually see a condensed version of this invoice. You'll see the $362 that was originally charged, but now the balance of that invoice is, or the balance of that item is $0. You'll see the $20 and $40 that was done on September 30th. You'll see the addition of the $300 on October 3rd, but you'll also notice that one item was changed on October 3rd, and if you actually expand it, you'll see the adjustment of the minus $362, which gives you the balance of $0. So you actually see all of those details within Uplifter that you can actually see when they occurred within the detailed Invoices detailed report. But again, this report is as at. It requires you to sort of move things back and forth to sort of figure out the movement of everything, whereas the ledger report is always correct based on the time periods that you've actually looked at. So if you ever run into issues, you notice that the ledger account, your ledger report isn't balancing, gift certificates are typically the top reason why they aren't balancing. If there's any other reason why you're finding that your ledger report is not balancing, please send us an email. We'll take a look and help you track that down and make sure that it is set up correctly. We've talked about that. I'm just looking through my list to see if there's anything else. In terms of, hold on, let's just see here. Where's my QuickBooks journal entry? So here I'm just going to show you within my QuickBooks some of the journal entries that I've done previously under reports, under your general ledger. Oops. Under your general ledger, these are some of the journal entries that I've actually recorded previously, and this is what it would look like once you've actually recorded that data into your QuickBooks, and you can see the balance of your debits and credits and you can do that on a daily, weekly, monthly basis, depending on your size of club and how many transactions it is that you actually have on a regular basis that you want to actually close off that reporting. So, I think that covers it. I tried to push through those last few bits at the end. Garrett, did I miss anything?
No, we missed a ton of stuff, but I mean, that's all we can do, you know?
Do we just start over again? Do I start over again?
Yeah, that's fine. No, I think that's absolutely everything. Now, actually, if you are able to pop over to your Uplifter system and go to your ledger accounts, please. I did actually miss one small thing here when we were talking about creating revenue accounts. One of the items that I skipped over, because we talked a lot about programs, was products. Here you can actually see a membership fee being accounted for. So in account 360 of the revenue accounts, we have a membership fee. We also have above that in account 302, products and subscriptions. So we have default for subscriptions, default for products. Those can be in different things if you want to. That's totally fine. And then, of course, we have the invoice line adjustment charges as well. Oh, fancy. So if you do have adjustments to your lines, we saw some adjustments previously with Jackie's invoice example there, where you have a product worth $100 maybe, you take it off $50 or whatever, or even if you have that through a discount, as you're seeing now, you can tag those individual items as well and account for those and capture those revenue transactions as well. So if you want to capture it, chances are there is a tag out there for it. So don't be afraid to give us a shout if you do have questions about, I want to capture it this way or that way, and you're not quite sure how to do that. Please let us know. We'll definitely help you out with that.
Yeah, definitely. We can definitely help you take a look at how you've set up your ledger accounts and try and help you match that up with your accounting. We do have a lot of clubs as well that don't actually do any of this tracking, and they just lump in all of their revenues together as one sort of, all of my online registration revenue is just, I just record it as one lump sum within my accounting system, and then they rely on all of the financial and revenue reporting within Uplifter to do sort of their nitty-gritty, their operational elements to determine, how are my programs moving, growing, where am I seeing the different pieces of revenue, and their accountant just needs to know how much money went in the bank. So if that's the type of system you want to run, you can certainly do that. So this simplifies your ledger accounts very, very easily, where you're just really recording payments. But if you just want a little bit more granularity within your accounting system, definitely use the ledger accounts. It gives you the back and forth and all of the specific debits and credits in terms of managing how those revenues are attributed to your assets and your receivables. So I want to thank you for all of you that decided to sit here and miss out on your lunch hour and 15 minutes more to talk about accounting. I actually love numbers and accounting, so I was very excited to do this session, and I'm glad that you were able to join us today for your lunch hour to do that. Garrett, is there anything else you want to cover off before we sign off?
No, just next Wednesday, we're going to have another webinar as always. So we'll have this webinar posted up on our webinar learning center there. So you're more than welcome to watch that as soon as it's posted, usually by the end of the day today, maybe tomorrow. And then you can watch that and you can join us for the next webinar as well. We're doing webinar Wednesdays. Very exciting. I think our next one is discounts, if I'm not mistaken. That's another big one. So a lot to look forward to. Thank you, everyone.
Bring a big lunch.
Today. Yes,
bring a big lunch.
Absolutely. Thank you, everyone, for your time today. As always, appreciated, and we look forward to seeing you again.
Have a great week, everybody. Thanks.